Have you been trading the forex market for a while now and you are not profitable? You've tried so many trading strategy, you've tried so many trading system, you've used indicators, 1, 2, dozens. You've tried so many courses from different forex guru, yet you are not profitable. You are in this circle of doom and you are considering what? Quitting. Please, my friend, do not quit. My friend, because in this video I'm going to share with you 3 principles that you need to understand in order to turn that losing streak into a winning profit, into a winning trading system. Without wasting time, I'm going to go straight into the video. Now, when I started the forex market back then in 2008, I didn't know what I was doing. I did not have a trading plan. I did not understand whatsoever anything in the market, okay, other than going to a community where other traders share their ideas, and then gradually I was able to know how the trading system works. I mean the platform, how to buy, how to sell, and the rest. And during those times I was a break-even trader. Most times I blew account, okay, and the reason is because I do not understand these 3 things I want to show you. Okay, now the moment I started getting an understanding of my hand around these 3 things, my trading journey changed, and right now I know the level I am when it comes to what? Trading. So bring out your pen, bring out your paper, and write this down. Things you need to do. Okay, the first one is you need to go back and understand top-down analysis. Okay, I know you say, oh, I know top-down analysis. Listen, my friend, okay, even if you know, listen to me, because you're going to learn one thing here. By the way, if you are pumped up on what you'll be learning today, make sure you hit that like button. Okay, now what is top-down analysis? Top-down analysis simply means a process of what? Looking at the higher time frame and determining the direction, then you go to a lower time frame to execute that trade. Okay, if the higher time frame tells you that we are bullish and price is heading to a particular target, then you have to go to the lower time frame, okay, and look for a way to enter that trade and in order to meet that target. Okay, now for example, in Euro USD, last week I predicted that this low should be taken. Okay, this low should be taken, and you can see when price opened, we were able to take a good short trade and took out this low. Okay, the reason is because we understand top-down analysis. Okay, and I'm going to share a video with on how we were able to pick a 10-hour trades during the week. At least that was on Thursday. Okay, so with this now, for example, if I'm to use a replay feature here, let me just show you top-down analysis. Okay, this is how top-down analysis work. Because why do you need to know the top-down analysis? Is because of direction. And remember, in this game, once you get your direction wrong, that day you'll be on a losing streak. If the market bias for the day is bullish and you are looking for bearish trade setup, you'll be on the losing trade. Okay, so you have to look for a way to refine your strategy in terms of understanding the directional bias. That is the most important thing. If that is not done, your other block trading strategy, that fancy one, will not work. Your support and resistance will not work. Your trend line will not work. Your chart pattern will not work. Okay, your supply and demand will not work. Listen, I've been there, and this might result in you deciding to quit. Okay, because you would think that the market is just against you, or someone is at the other side of the market trading against you. It's not that way, my brother. Okay, it's not that way. The thing is this: you are simply at the wrong side of the market. So understanding top-down analysis is going to help you to, get that 50% right where the market will be heading to. Now, looking at this here, okay, looking at this, let's assume you enter the market during this week here. You have a swing high here, This is a swing guy. 1 minute please. You have a swing guy here. A swing guy in the sense that we have three candles. Okay, 1 minute. 1 2 3. The middle one is the highest. So this is a swing guy. Now this low was unable to break structure. That makes it a weak low, and that was the analysis I did. This is a weak low, and this low should be taken. Now what have you done there? With the higher time frame on the weekly, you were able to predict the movement of the market, that the market in the coming week should be what? Bearish. Simple. Why? Because you understand top-down analysis, that this low failing to create a structure becomes a liquidity that will be what? Taken. So now what you need to do is to go to the lower time frame for trade setup. Okay, go to the lower time frame for trade what? Setup. Now your trade setup on the daily, if price was able to get there, will be here. Okay, this hidden base. You'll be waiting for price to trade back in here, okay, before you look for that selling opportunity. Okay, so your trade setup for the daily is this place. You are only entering the trade only if price taps into this area before going lower. So now this is your setup in the daily, but sometimes price may not get in here, okay, because the daily time frame to me is also a higher time frame. So you go to the 4 hours, go to your 4-hour time frame, and then observe what can you see here. Now in this case, I noticed that this eye took liquidity here and then went lower. So the 4 hours has created what is called a break of structure, and the eye responsible for that is this. So this makes it a strong eye. So that means in the meantime, price is not expected to trade above this. If price is coming up here, it's not expected to trade above this. Okay, so now what I will do is I will also create what? A point of interest in this supply zone, which is the hidden base. Okay, rally base drop, which is the hidden base. Okay, now this is my trade setup on the 4 hour. This one above here is the trade setup on what? The daily. So you can still refine this way. Okay, you can refine this to this level. This is the 4 hour, this is daily. Now you don't stop there. Okay, you then go to what? Your 1 hour, and then from the 1 hour you now monitors, you monitor the price. Okay, now let's see what happens to price. So we can see that there was a gap. This gap is as a result of the ongoing circumstances between Russia and Ukraine. Okay, you can see this gap here filling into this 4 hour what? Supply zone. Okay, 4 hour supply zone. Okay, in this case there's nothing you can do. You just woke up, you saw price has already moved. Now let's play price again. Okay, so now in this case, now this is what you should be doing. Now what happens here? Now we have liquidity here and we have liquidity here. Okay, we are building liquidity. This is liquidity engineering for this point of interest to hold. Okay, now you go to your 15 minutes and let's see if we can refine this area on the 15 minutes. Okay, so this is the 15 minutes here. You can decide to enter this trade here. Okay, so let's see if price will get there. Your stop loss will be above here. Remember, this line we don't expect price to go above that. So we have 11 pips stop loss, and let's see as it plays out. Yeah. Now in this is just a simple analysis here. You can see price has tapped into our what's it called, point of interest. You are in the trade already, so you allow price to go. Now by so doing, what have you done? You are in profit because you understand the direction of the market. If you were to buy, if let's assume you were looking at bullish momentum and you are trying to buy from here, okay, you'll be stopped out. Okay, even though we have a sweep of liquidity, break of structure, you can see we have other block price trading. You are in profit for a while, so what happens? Price took you out. So you can see this is the trade there. Now, because you know that the market was heading to where was the market heading to? This low. The market was heading to this low here. This was our target here. This was our target. Okay, so you go back to your 1 hour. You go back to your 1 hour. What do we see? And then you target that low. You have a decent trade. Okay, you have a decent trade. So the moment you understand top-down analysis, it will help you in understanding the market direction. And you have 11-hour trade. Okay, 11-hour trade, beautiful trade. You didn't even go down to the 5 minutes to look for even a better risk to reward ratio. Okay, working on the 15 minutes is okay. Now, in this case, you'll be more confident. It will help with your psychology because you know that over time, because when you do this, do the back testing, and you notice that over time, your areas that you expect price to respect was being respected. Okay, and where you want price to head to, price got there. Okay, price got there. So your top-down analysis needs to be top-notch. You need to understand top-down analysis. It will help you stay away from the wrong side of the market. Okay, that is number one. Now, number two, what you need to know, number two, is liquidity. Let's use this liquidity. Now, the first one we did here is what? Top-down analysis. Number two is liquidity. Okay. In the retail world, we were taught less on what is called liquidity. We don't even know liquidity exists. Okay, and that was why I was losing in the forex market, because I do not understand liquidity. Okay, for you to understand liquidity, I also did a video. I will put the link in the description. But first, watch this video to the end. Watch this video to the end. Okay, liquidity is another concept, another principle that you need to understand. If you go back to your top analysis illustration here, let me go back here. What made this point of interest, this hidden base, what made it a high probability trade setup? Because I know there was liquidity before. So all you need to do is to add confidence to your trading, understand liquidity. Okay, there are different forms of liquidity. We have the sessions liquidity, which is the Asian session, the London session, the New York sessions. You have session liquidity. If I put on my session liquidity on here, you will notice something. Now they are on. Okay, so you can see different sessions are on the chart. Okay, and you can see here price in this area here took out previous sessions what liquidity. Okay, and what do you need liquidity for? What does the market need liquidity for? To fuel the market in the intended direction. You can see the moment market took out these liquidities out, you can see we have some high here, Asian high, London high, and also New York high resting above here. This is lot of money. This is money. Okay, let's see. So this is money sitting here. Okay, That is money sitting there. So liquidity is the fuel that pushes price to its intended direction. When market came in here to grab all this liquidity, those that were in here and are still in the trade, market took them out, filled up in a better price, which is this OB here. By the way, I will share a trade setup I took on this trade here. I took this trade here that gave us a 1 to 10 out, okay, and I did not take that. I didn't take any form of partials because I know price was heading down here. So I left my full position open. Now what gave me confidence is liquidity. Okay, liquidity. If you go to the lower time frame, 15 minutes on this chart, let's go here, 15 minutes on this chart. That area is an IPA candle. Okay, sorry for that. That area is an IPA candle. Okay, that was where I took my trade, and immediate price entered there, I pulled the trigger. Okay, as price entered there, I pulled the trigger immediately and I held that trade. Now how do I know? Because during the London session, you can see this is London session here, the market was just moving in a sideways position. Okay, why didn't I exit this trade here? Because if you are a beginner, you are going to exit this trade. Okay, because you're like, okay, I'm in small profit, let me take it off, because you don't know if price will go up. I was so confident because I know my point of invalidation. I know my point of invalidation, that when the trade goes there, then I'm wrong. And that is what will lead us to the third principle, okay, which is called discipline. But before I go there, you need to understand liquidity. We have a session liquidity, we have equal highs liquidity, we have trend line liquidity, okay, and you can use this liquidity as areas of target, where you can take your profit. Remember that on the weekly time frame, okay, this low is liquidity as well. Okay, this low is liquidity. Why? It fails to break structure. So this is our target, liquidity. Price needs to get there, do any form of liquidity grab before pushing higher. Okay, now that takes us to the third one. The third thing you need to know, the third principle you need to understand is discipline. Because as a growing trader back then, I was not disciplined. Okay, and how will you be able to deal with your discipline? I was not disciplined. You need discipline. Okay, discipline in the sense that you need to trust your trading plan. Okay, you need to trust your trading plan. Allow your trading plan to work. When I wake up in a day and I want to trade, I have the risks that I'm willing to risk. Okay, because the risk is the only thing I can control in the market. That needs to sink in. The only thing you can control as a trader is your risk. You can decide to lose 1% of your capital, 2%, 5%, 10%. That depends on you. You can do that. You are within that control. But where you are not within the control is the outcome, future outcome, because no one knows. But with our strategy, we know over time that we've backtested this strategy and it has a good edge in the market. So why don't you trust that strategy? Okay, so the next thing you need to do is to be disciplined in terms of your trade management. Okay, be disciplined in terms of what? Risk management, trade management. You don't need to go out of a trade anyhow. Okay, take profit at logical places. Okay, and also in your psychology, and this will help your psychology. Okay, because you are allowing the system to play on its own. Okay, you are allowing the system to move on. Okay, in this case I will not be showing you chart. Okay, this discipline deals with what? The individual itself. That's why if you give two traders the same trading plan, the same strategy, one will be more profitable than the other. It's because of the emotional aspect of trading. Okay, human beings, we are emotional creatures. Okay, so the earlier you tame that your emotions and allow your system to work, the more the more better you become as a trader. Okay, so in those days before now, those days I noticed that I was making silly mistakes. I did not know how to calculate risk. In fact, I don't know what is risk. I only select the lot size based on my emotions or based on how greedy I am. If I'm very greedy, I use a high lot size. If I'm fearful, I use a lower lot size. I do not have a plan. Okay, and this discipline makes you what? Have a trading plan. You have a trading plan, you work with your trading plan, you execute your trading plan, and you repeat the process every single day. And by so doing, apply these three things in your trading. Okay, take up that challenge, apply these three principles you're trading, go back, understand top-down analysis. I have two videos on that. I'll link them in. One is top-down analysis, the other one is multi-time frame analysis. Okay, then the other is liquidity. Link will be in the description. And discipline, I've not done any video on that, but it's all boiled down to risk management, trade management, psychology, and your what? Emotions. Now, if you want to understand the strategy, how to put your strategy together, then I will see you in this next video.